Good morning, it's Monday and we are in September. It's September the 2nd. And welcome to this next 2 hour of Bund live session. Live evaluation of bias, live big picture to micro picture, live let's talk mindset. And this is the open right now. And we wait now and watch the open till it's done. And then I will go as every day and comment on what I'm seeing and how can we use it for our own evaluation and our own rating of bias for our trades. All right. Okay, we see that nothing has happened so far. That means with the open, the market is kind of very slow yet. But if we look first in the order book, we see a normal order book liquidity. That means no sort of very low, but very normal normal liquidity in order book. This is also here the area of our range long level. You'll see that this range that was created here in the pre-market is also very tight. That means if you really want to go now for a long, we need to see that the price is testing back again this area, which would be also smart because look here at the situation. Delta, once we're reaching these lows and testing these levels here, we always see some selling into this level. We've seen this here at this moment, and we see this now with the phase starting hitting the low again, which was at 8:47. You see then ongoing selling into it, absorption a little bit, but now it is more like need to be confirmed also this behavior in the cash market where more volume is traded. So this is very important now. As the range is also so very thin, and we look in here for our target number 1, the scalping targets only here, then the 01, 02 level, you see this would be kind of stupid to go here into a trade. The range long target, of course, was already confirmed then with the auction phase here before the open in the Bund at 93, but you know I don't trade a trade before the cash open because the volatility is can be a little bit higher, and also there is not enough liquidity normally backing up my trades, and so I need to work with different stops. So no trade so far. We know this is a range long level, and we also know at the upside here, this levels at 04 can be also a range short level. That means we don't know yet if there is a real interest of people testing outside of this area, outside of yesterday value area low, which would mean then that they could get into a short trade at this range here, 02, 01, 02, 03, 04, we want to see this. Or if we see that they don't play it, we may see prices coming back before here to the low. And then we have two opportunities. We're getting normal range long with double rejection. We could still get a long with a breakout that fails. And the other side is we could get a short, because this is also our short market, a short level from the big picture preparation, because here at the 91 we have seen some accumulation in the evening session and also at the main session at the last trading day, so Friday. That means this is an important level to also look then here for some decision making, some kind of line in the sand. And so we wait for this. Yeah, so we will see here now, can they make it above the POC or do they fail? If they fail, sorry, my micro was not on, I think. If they fail already here at the POC, that would signs of weakness. This would be good for a sell short here. If we see then also increasing sell volume in the delta and a weak pullback. That's very important. So if they really fail now here already, then this would be a good sign. But at the moment, the transaction taken place in Bund are very tiny. So we have in the tape we see orders 10, 10, 12, 60, 30, 29. So there is only 2 orders here in the sell side, the last since the open 3 above the 130, 120. So that means it's a little bit weak behavior. So no matter what, we need to see, of course, more volume coming in. Right now, we don't have a range that can be traded. if you got into a long already with the open, what I wouldn't recommend, because we don't know yet what is happening at this time. But if you already got, because you read my long level here at the 93 area, and you are in, now you see you have to wait till it loosens, and target area would be only 01, 02. So definitely nothing to do right now. No good risk reward. We wait that either we see now selling volume increases when taking out the low and pulling back weak to get then into a short. Or we just do nothing and wait for the range long or range short levels with responsive behaviors on the sides outside. what we see here is that people getting out of the accumulated longs. So one thing is clear to say so far today. This is not the normal Bund day so far. That means we don't have so many traders that could move the market so far. That's totally okay. Of course, the exchange today is closed in the US market, but this should not have influence today in the morning session, where we more lean to the London traders and the European session traders, of course, in general. But anyway, we see then that at least today, Monday morning, maybe some other time frame traders are still sitting in their morning meetings, in their houses, in the banks and in the investment funds. So yeah, that's just maybe more things to talk about. And also the short-term traders are not interested or not able so far to hit the bid or pay the offer as much that then we can see price movements. As I told you again, the order book is quite a normal one. So not like last week when I told you at the beginning, or 2 weeks, I don't remember now when it was, but I think it even was 2 weeks ago, where we had this very weak order books, where we had a higher volatility. But the amount of orders coming in so far, just the amount of trading transactions today morning, are a little bit very weak. Only small numbers are traded. So liquidity is good, but amount of trading orders, normal order size means orders above the 30, 40, 50 is a little bit weak. So nothing to do so far. Do not trade because you're bored. Shouldn't be a problem for you. I think. But when I look back, maybe 3 years ago, when we started with our trading, when I started with my future trading in this school where I was, in this community of traders, I know, for me at least, it was a problem at the beginning. So I traded sometimes because I was bored. So you shouldn't do this, because trades here would be outside of our, in my case at least, outside of my prepared levels. So this would mean, no matter what, this would be lousy trades. And remember, if you're doing lousy trades, you're far, far away from becoming consistent, profitable or a professional trader. This is the first and important thing we have to delete. And this is the lousy trades that are not with our rule, either mindset or technically. Doesn't matter. The single violation in one of the two main topics, mindset and technical, is a lousy trade. So nothing we want to do. Let's see if we can get now more movement, or if it's just another attempt to get at least some other participants into a possible trade. What we have to watch then when the behavior is different, because there is only a minimum of orders are getting traded, we have to also know this also has, of course, impact on the behavior then what we want to look for. Okay, let's make a break. We watch now. Do we get a good short opportunity? Remember, what do we need to see then? All right, we see now increasing selling volume on the downside. We are waiting now for at least one pullback into this level. All right, we want to see at least a pullback. When we're reaching this volume edge here, I would also say the 90 is important, 91, 90 here. So I want to see increasing selling volume going on. And then with the first pullback, when people are taking some profits, we don't want to see harsh rejection, because this would mean that we stay in this range and having a failed breakout. And right now what we see is we are at this level of interest. Nothing has happened so far. We have seen some first rejection, but remember, I want to see first that we really get, as you see, that the volume edge is a little bit blurred here. We have a bigger here and then a second here. That means this time it's not only one, but this is two levels. For me means that I go for the lower level. I want to see this certain behavior again. now increasing selling volume, and I know it can go very fast that we hit then the 82, but no matter what, I need to see some pullback signs to see if now is there some hard rejection from the buy side is coming or not. If it's not coming, but we dabbling around here without a heavy buy volume, I'll get straight into this trade. Okay, see how the profile now looks. We have already 2 buy control levels, sell control levels. Okay. Let's wait if prices gives us a chance to get into the trade. It can be that we don't get the chance because we're not pulling back anymore and price is just hitting our target at 82. But if you go just now into the trade, that means anticipate, you have to live with a price coming back to this level here of 92, 93, because this is the last selling control level. If it runs against you, this would be okay. And so, as I don't like to have a trade with 1, 2, 3, 4, 5, 6 profit, and on the other side here 1, 2, 3, 4, 5 ticks loss, this would be not good risk reward for me go into the trade. So I wait for the signs. Okay, we're getting closer to this area, and the pullback so far is weak. That means it is okay. It is good. Let's see if I can get an entry. My order was at the 90. My order was at this moment here, but I didn't get filled so far. They traded 217 contracts, but mine wasn't one of them. So no trade. Now we are in impulse phase number 1. Remember what this means. If you got in here, I didn't get filled. I can show you here. This is where my order was at the 90, but I didn't got filled. So I delete the order now because we are at already in impulse phase number 1. That means this is now the moment where you already should have been in the trade. But remember, I didn't get filled. If you got filled at 89, now you can pull your stop closer to maybe the 92 level. So if you've entered then more expensive at the 89 or you got filled here, then your stop came now at the 92, 93 level. This is okay. If you see then impulse phase 2, remember our first target is already here at the 82, 83 area. All right? Sorry, 83. This is the minor POC of this distribution. So take your first profit. I would take my first profit then here. When we're reaching now or getting into a impulse phase 2, they can pull back now, everything okay, as long as not boom, a green big bullish candle. If they getting back to the low with increasing sell volume, that means impulse phase 2 would then start, all right? You can then pull your stop to the entry level, but I wouldn't pull it yet because we haven't seen, in my rules, the impulse phase 2. And this pullback here is so far totally normal, as long as we don't take out our 92 level, where I told you now at 93 your stop should be. So 3 ticks away from your entry area. This is just some profit taken, and now you see they make a break. They look if new sellers, where are the new sellers, and coming in here again. And they wait. We can't do anything else but to wait here and wait for the next impulse phase from the short side. And as soon as you can spot vroom, delta, vroom, 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 the next attempt to the downside, but if you then see the absorption appearing here at the low level or even before, but we need to see some strong selling into it, then you can pull your stop to your entry level, because this would then mean a signs of weakness and already giving up on this trade. All right. Look at delta. The first a little small confident sellers are coming in again. Now more 100 have sold here at the 84, hit the bid at 84. Oh, but do you see something here? Liquidity is coming in. So this would make it even a little bit harder to get through. But let's see. Are there still the sellers? Because we are about to see now if we get some impulse phase 2. Means just thinking for your stop handling. Let's wait. This is interesting. You see now, they couldn't make it with the first try to get to the low. They were absorbed. But you see also here the buying. You've seen the candle before it turns red. I hope you see that they try to get to the upside now. Put the people out of the shorts. But you see they failed because see the candle now. This is like a bearish pin bar candle. Okay, that means bears absorbed also then on the other side. Boom, we're reaching target. You should now secure your first profit. 82, 178, 83. This is our first profit target. You should secure your profit here. If you're handling only one contract, that's it. The trade, this is your trade. If you're handling 2 contracts, you can now make this trade run for free. That means you can pull your stop now to the entry level. This should be then around the 90 or 89. Or you can put it at least one tick above. So on scratch, break even, not, but on scratch at least. So you think of it, you don't risk any money now anymore. You made your 6-7 ticks with your first contracts and the second position now is running. And where could it go to? Why should we keep on this trade? Because there's at least some kind of realistic chance that we get to the lower side of this distribution. And when we talk volume profile, then we see starting at the 76 area here in the weekly profile. I show you at my 15-minute screen. You can see here that we do have in the week profile. See, this is the week's profile from last week. We do have some lower volume node and also the beginning here of the legs from the strong low here. This means this level of 76 would be worth to have a look if, as they stay in short mode, if there's a chance that they can hit on also this target area around here, starting 76 and going down to the 74. You see this green line here. This is this lower volume node here from the target, from the complete distribution. So they may test even this level here. Nothing to lose. If they're now going up like a V-shaped reversal, nothing can happen to you. You understand? The only thing that can happen to you would be then that you get stopped out on scratch. But then you made your points already. So it is worth definitely in trading to wait now if they can reach this target. This target here around, starting at the 76 level. This lower volume node and this distribution where the reversal started yesterday after the short, the strong low, the new accumulation and getting back into the range long yesterday, last trading day. So let's wait. Next target, as I said, would be here, the 77 area. back to the trading screen. Here would be our next target. There are still sellers in the tape, and also in the delta you can see it. The pullback phase, see the pullback phase, still some not super heavy, but you see some sellers got in again. So wait, if you're handling two position, wait for the 77. Boom, you got filled. Only 50 contracts left as they hit the bid and one contract. Boom. So you should have definitely got filled and reaching now target 2. Wonderful. So you should have made a 6 or 7 ticks from number 1 and 12 from number 2. That gives you already a 20 ticks trade. Now again, as always, in Bund with a very, very small, tiny risk. So if you have entered at the 89, remember what I said. I wanted to get filled at 90. I didn't get filled, unfortunately, but you see, my stop would have been at the beginning around the 95 level. That means for me 5, for you if you have entered 89, it would be 6 ticks. Remember, compared to the DAX, how many points stop you would have needed for a similar reward. And remember, Bund gives you this big chance with a very small risk. And of course, this is not 30, 40 ticks what you can make in 2 minutes in DAX, but also remember that Bund gives you the chance to also work them with 5 or 10 or 20 contracts without even moving the markets. You can make your money in Bund with the leverage and still having a better risk than in DAX, and it's still more controlled. Anyway. Okay, so we're reaching the target area. I said that this is also a possible second target area here, the weekly lower volume from the last week's trading. And now this would be here 77 as they reached it. This would be my target number 2. All right, so far, what can happen next? If you see still increasing sell volume at the low and you're trading maybe a third position, of course, you can stay in this trade and can wait if they take out the strong low. If they can take out this level as 64, that means they go into this lower distribution of the week and testing even the 64. Your stop should anyway be around on scratch because you have nothing to lose then. But if you only have traded 1 or 2, you should reach now your targets. Your targets that we also know from my big picture preparation, and see target area was for me the 83 and 74 area. And 83, 74 wasn't reached in my big picture preparation, but at least the beginning, the 77. I would be happy with this. Also, you can see here in the footprint that there's a lot of liquidity lying on the downside. That means also here people, of course, looking for the cheap entry now in the big picture. And we can have a look to the big picture. Look where we are now. We are now almost in the cheapest area from the big picture to enter the range long here in the big picture. So that means, of course, this was the cheaper area, and they already have started here at the 76. You see here this lower volume node, the edge. So this is, of course, now the cheapest area so far to get into a long trend also. I'm not looking here for a long trend because we made already some ticks to the downside and we don't trade against the trend. What I would look is just handling the short if you have a third position. As I told you, stop around the entry area and may see if we get a chance to get to the second time to the low, or if it gets a double button and then really backing up and getting back to value, or just for the chance of a third contract to see then the 69 level. Nothing else to do, and you have to wait for market to give you the signs at a certain level. So let's wait. All right. Yeah, nothing to do. You see, there was a second attempt here to get to the downside, and that means people tried to sell into the low, but they were stopped. They were just stopped. That means the move here at this area was kind of weak at lower levels. That means, for example, the level 81, we see here also in the volume, almost no contract was traded here. There was selling, especially into the 83, the 82, and then again at the 80. But so far, till here, we saw also absorption. That means there's people who sold into it here, got at the end then on the low, got absorbed. And most of the selling here into the 82, 83 area here, already starting here, you see this in delta, was also absorbed. That means so far, bulls and bear fights. That means I wouldn't make any chance to my possible third contract here. I hope you understand. Because it is not clear who can win. It's still everything possible for both sides. So you see short sellers still in the game. Few people tried now to get to the upside. They also got stopped out because people sold into it again. So that means they take out the risk of the book. We have no clear advice that there's some either the bulls or the bears are in the advantage right now. So everything is just normal. You see, of course, a lot of liquidity here provided at the downside. I'll show you in the footprint because you not get disturbed by my green rectangle that just marks at the longer term the cheapest reversal level for the long side. But you can see it here. 68, 70, 71, 73 and 75. There are a lot of contracts. 576 for comparing here, 455, 461, almost 600 and almost 900 here. So you see, this was the level I prepared from my big picture preparation. Do you see it here? But you see also, it can be seen here in the volume profile as the strong low here. And if you look at the TPO chart, you can also see it here. Sorry. You can also see it here, the single prints. And now you can see the confirmation also in the longer term liquidity in the, at the moment, real time order book. You see this here. Do you understand what I wanted to tell you? You can see always in the order book if a area is also confirmed and taken on by the other time frame traders or not. And what do I want to say with this? Just one thing, that you can grow in your preparation and get better, because you normally should see that these levels here, these levels here should be having this kind of behavior with provided liquidity. So you can see if you're already good in your big picture preparation, you can make this with your market and check it, so the liquid markets, and check this if there is liquidity then provided at the area where I make the hypothesis that this is the range long level, the cheapest income at the bigger picture. So you can make the hypo and say, okay, I make here this green rectangle because I see here this is a strong low. It was also a strong low already here. I can see in the TPO that this is the areas of a single print. We see this here, we see this here. So we say this is the cheap long area for when we are in a range market. And you can say then, all right, what I want to see is then, okay, cool, see this here, there are this green rectangle, this green lines here, this is then the liquidity that is provided. And of course, you can expect at least then also some market reactions. That doesn't mean that you can just stand here with a long position and buying, limit buy here at the, 80, 75 or what, but you should at least be interested on watching then this area if you can see some kind of rejection, if we hit this area, all right? And then you can go for the reversal with taking out some neckline or whatever, with increasing volume and weak pullback. It's always the same. So far today, we are still in a short move. This is not, the fight has not ended yet. You only see that both sides are still not giving up. Okay? That's just objectively what is happening. Nothing to do. So for the one who was lucky to get an entry, I didn't, because I was just not filled at the 90, unfortunately. There was some contracts left and I was standing at the end of the line, maybe. You know the first in rule and first out in the exchange, and so I don't get filled before the people who were standing before me from the time got filled there by the market buyers here, because I want to get sold. So we need some people who pay the offer where I'm standing, and there was obviously too many people standing in the front of me, so I didn't get filled here. But if you got filled because you were standing lower, what do I know? I don't know. I would just tell you, you made contract 1, you made contract 2, and now I would wait for contract 3, because it's not, the fight is not over yet. And you have your stop here on scratch, and then you just wait to either get stopped out, then so what, you don't make your money with the third contract, or the good thing is you don't pull your stop too close, because you're still having a chance as long as you see delta shows us behavior of again trying to get to the short. Now, what one can see is, at least, of course, we are a little bit weakening down. That means the last attempt here of the shorts wasn't super strong. But let's give it a try and see if they really take out the structure now, the delta structure, make the line a little bit thinner, all right? And then you may have a chance to say, okay, they now give up here in selling, and now bulls trying really to get in control. But for me, then this would be just a sign of leaving your trade. But for you, it doesn't make any difference, because you either got stopped out anyway here. That means technically it would be the same result as so doing nothing and waiting to get stopped out, or making it actively by watching the market. It doesn't give you an advantage here. Do you understand this? No advantage if you react on breaking the delta structure or getting this area. This is some really cool and interesting thing. These opportunities you normally only have in a very liquid market like the Bund, because there the levels of interest most of the time staying the same, and then the level where we watch on one spot the initiative buying would be only then also the reason why price should go there again. That means you can be quite offshore just thinking here technically, if they reach this level, there must have been some initiative buying again to get out of the more people who were trapped down than in a short. Do you understand this? That means in Bund you can be some kind of lazy after you made your money with your contract 1 and contract 2, because normally you can see this here behavior, that this is still the same like it was last week or the week before. So nothing to do, but either you get stopped out, and this can only happen if we see now initiative getting finally above this neckline here of 88, because this was the highest high of the last pullback area, and then this level here. And remember, no trade for me, because where can this long go to? I can tell you what, there's still the initiative sell volume starting from the POC. And when we look at the delta, we get the confirmation that the first bigger selling started here at 9 o'clock 18 and 30 seconds. This was here. That means you see here the separation putting down. That means our volume edge here at the 94, 93 level is our selling control level. As long as they stay here, sellers are over in the big picture, still in control. And then remember last week when we traded together the long trade out of the short scenario, we had something different compared today. Can you remember what the difference was? I can tell you. The difference was that our range level, I make some rectangle that everybody can see, so the yellow one, our upper range or target was far away and not so close like we are here. See this? Means if you're looking now here for the long taken out the last seller's control level, you only had the targets to this area, 97, 98, because it was so tight in the morning. And last week we had some ticks, 6, 7 ticks to the upside. So that means if the profile would look like this here, and not like this, but would like this here, then we would get some chance to say, okay, I want to see they take out the last selling control level, pullback week, initiative again, then you have the chance to trade at least here to the overnight low or to this volume edge from this imagined profile. But as you see, we don't have this profile, and that means no trade for me. Okay, let's switch the topic and go into the mindset again. So, psychological journal. Last week, some guy asked me about some help with his psychological journal. I make it clear, I'm not a psychologist, and I will not do exclusive kind of psychologist mental training, because I think this would be like fake. Would be then somebody like is a baker tell you how to repair your car, even though the baker is a hobby mechanics and has some space in his garage to repair his car like in a hobby way. So you understand this. But what I can give you like is at least recommendation or a advice or at least some way to think it new, to get and find your own entry levels to get to this topic. So this is what I can help you. But for example, of course, I will not hide anything, so I can share at least the information what I'm doing, and you can then think by your own and say, okay, this sounds interesting for me, and if it helped Anton, why shouldn't I try it? Because to try means not to pay something, and it's for free, and you can watch yourself. But I can tell you I'm working with a psychologist, so a real, not a fake or whatever. So I'm working with a psychologist for my trading mindset, and so I can give you this from this perspective. For example, what I'm doing now, as I'm then doing now a break because there's nothing to do for me. What I'm doing now is, when I click to mute now, after telling you this, that then I will fill out my journal. And I have two kind of journals from the psychological thing. That means I have journal number 1 where I measure every trade. I measure the trade in terms of my awareness of my physical sensations, emotions, and thoughts. All right? And I split every trade. So it means I split it into a execution phase and a management phase. And give me a short break now, and then we will come back. I just will show you now what's happening in the market, because you see what I mean. As maybe you didn't understand it before. I told you that entry level around here at the 90s. And I said this is where your stop should be, at the 90s. Maybe you entered at 89 or you got 90, you were very quick here when pulling back. But think of it. I told you that reaching this target in a liquid market, and I told you this at this very moment around here, when I made this line, can only happen in Bund, as long as we already have seen that sellers are still wanting to go lower, 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 can only happen with initiative buying. This will not happen like in DAX with a few contracts, guys, liquidity vacuum on the upside. But you see in Bund now, we only reach this price areas here because of initiative. That's just what I want you to see by your own eyes. And I just want you to make your own backtests, for example, in Bund. So stop trading for maybe some days and just make chart analysis and go back and look at these behaviors. Just put on this 30 seconds, or I would recommend 30 seconds or a 2-tick range chart. So, and put on a delta and just watch these behaviors again and again and again and again, so you can trust and be sure that Bund is a liquid market and has, for example, this certain kind of behavior. Because what I wanted to show you is then that in Bund you can work some kind of with stop levels and everything with this kind of thinking. All right. We will go back now to this psychologist thing. And also remember that this now, at this situation, as I told you, they need to take out now the bulls, the sellers control level, which they did, but now we need to see only weak pullback. And again, people at least coming here, we need to see responsive buying in this area. Just if you want to prove this then later, this is the selling, the buying control level where they're starting now the initiative buying. You see this here, woof, woof. So that means this is why I don't look here for the long, because the target would be only here in this area. It can be, of course, go below, above, but important thing is this is a volume edge from the morning, and this is very tight. That means if you're now seeing responsive buying wherever it will start, if it starts here, but think of it, maybe it starts already here, then what give it to you? This gives me only 2, 3 ticks, 4 ticks, and on the downside I have to accept at least 4 or 5 ticks. So this is bullshit. This is why I'm not taking on this trade. If my target wouldn't be here, but let's say here, because volume profile shows at a normal distribution from the open market, that they re-enter this area, of course, and then having a chance to get to the other side. But here getting the chance to the other side means only 2, 3 ticks. This is why I'm not taking on this trade. This is just the experience I made. And if you don't believe me, you can trade your own money and try it. It's okay, but at the end you will see you will lose money. And then we will start to make this kind of thoughts to see how can I get them better. Okay, let's go to the psychology thing. So what I measure then is my sensations. So for these examples, my sensations are starting, then emotions, and then thoughts. I'm starting with my sensations. That means take this day today. And I'm sorry that I cannot show you the journal, because this is from the program of this psychologist I'm working. So sorry, but I'm of course not allowed to share this information for free. And this is a licensing, of course, of the rights of the owner. So no, I'm not sorry, but this is of course something you didn't want as well. If you have made something, if you write maybe a song and then somebody shares it without his commission, and so I hope you understand this. I think this is clear. This would be like not a businessman alike. This would be unfair. So I can just tell you, but what it looks like is just having a journal, an Excel sheet, where I can now make some entries. And I give you the example for today, what I'm doing. I see a question here from a guy from our group. He asked me, would you mind sharing a Sierra chart template for Bund? Now we can talk about this. This we can talk about. Of course, we can talk about how I make my settings. This is no secret, and I have no. No, this would be okay. But I think we should make a webinar or something to tell everybody how to make the settings. Of course, yeah. This is for me. That's okay. For me, that's okay. But I think we should make some webinar to make it once and not then 10 times every time somebody asks. Anyway, all right. So I have this journal and I write down, for example, let's take today. I had this trade opportunity. I showed you in Dome at 9:21. I put an order to the level 178.90, but I didn't get filled. That means this is important because if I see a trade and don't take it, I cannot measure, of course. But this time I made an order, so I can at least make some measurement to my at the moment behaviors. That means short before I maybe got filled. So this is the execution phase. That means what I'm now gonna do is, after I talk here with you, I will make a report for the execution phase. That means I make here, I now start to write, it's 9:22 a.m. I of course can now, and it is only short term, in the past, remember what my feeling was, and I write down, for example, 9:22 a.m. my physical sensations, to be aware of my behavior. So that means I write down, for example, I was a little bit nervous today, sitting on the chair, leaning back and forth a little bit. And then I give it a rating and say this was a -2. So -5 would be worth, and +5 on the other side, euphoric, very hyper euphoric, would be worth also. So 0 would be the best thing. 0 would be totally in motion, in the zone. So -2 is okay. It's not super, but it's okay. This is normal. You're not gonna have a 0. You can be lucky if you have in between O and +2 or O and -2. So anyway, I write it down and say, okay, wonderful. And the trading phase this was the execution phase of I give it now the name. I have for every play a name. In this case, it was a X play short. So entry phase for X play short at 9:22. A good entry, because we have big picture mark. Then I see it was a strong volume, and we have weak pullback. So far everything is giving to execute this trade. Execute this trade. Perfect. So then say my feelings. What was my feelings at this moment? It can be very, very depressive on the left side, so minus rating, or it can be very euphoric, like, oh, I'm the king of the market. I know exactly where the market is going to. So this would be also not good. This would be overconfident. So in my terms, I'm always a little bit the minus guy. That means I'm not so overconfident guy. For me, it's always. So in this time, my feelings were like a little bit. Today a little bit uncertain because market was so slow before. Uncertain because market was so slow before, but also the feeling like some kind of focus and trust. So that's good. Was kind of good. So -2. So not super, but it was okay. And my thoughts were. Then, okay, hopefully this short this time was like this time give me a entry, because I knew sometimes you don't get the short entries because they don't pull back. That makes me a little bit angry. But also got feelings of, that's okay. That's okay. I have joy with the process. So this was like my thoughts at this moment. So rate them also a minus, I would say -2. So at the end, I see then a score of my sensations, physical sensations, feelings, emotions, and thoughts. That means totally was -2. So that's okay. That means when you start trading, this is maybe -5 or -4 or +5, +4. So that means your emotions are too strong in the foreground, and that's okay. But the thing is to write it down and notice feelings, are aware of them, and then say, you know what, fascinating. I do feel a little bit of angry that I maybe not getting entry, or fascinating. I'm still having some kind of nervous because it's a short trade, it's not my favorite play. Then I say fascinating. That's how my old behavioral patterns react. But I know what? That's okay. And when you start thinking that way, you feel then that it shifts and it's getting weaker and weaker. And you feel more than I'm focused. I'm in balance. I know that's okay. And so you get then these numbers, -2, and not anymore -4. Or you start getting from -5 at least to -4. And then a week later you start getting from maybe -4 to -3 and so on. So that means you see then one side that your behavior changes. That has impact then to your emotions. And you know what? The best thing then is you see then also your trading getting better. You know what I mean? This is then the evidence for you. Working on your mindset has a direct, immediate impact onto your trading results as well. Anyway, this was a lucrative trade, but in execution phase. But I did not get filled. So lucrative trade chance, but I didn't get filled. And that's it. So if I would got filled and had a trade now and made at least, let's say, you know that I'm only working this new place I developed 2 months ago, and what we're always talking now, I only trade them with one lot and with one contract, then I would go to my next journal, and this journal is more complex. This is about 20 sets, presets, or 20 things I have worked out in a program with the psychologist. So this is total individual. Total from my kind of thinking, based on my character, based on my trading demons I have, based on my behavioral patterns coming from my childhood, from my now experience as a grown adult, coming from my experience as a trader, coming from my failure, and also from my strength. You understand? And there's some tiny goal steps, step by step goals is a part of this sheet. Then there's a part of the sheet, my routines. My routine, what I have to do every day for day and day before starting my trading. Okay, this is the routine. I have to make it make this field green, that I accomplish this every point. Then I measure my lucrative trades and my lousy trades. Means I have stopped making my compare my trades in between winners and losers. This is history. I don't care for this anymore. I make the separation from lucrative or lousy trades. I don't care if it's plus or minus, because I trust in this process. I know if I get lucrative trades and my plays are good and I have my emotions under control, I will have automatic green P&L at the end of the week or the month or whatever you're trading, how many times, I don't know. And that's the next thing. Then I always measure this. I make some technical marks, settings, edits into this lucrative trade, what have to be given, for example, that it is a lucrative trade. A lucrative trade, this is then when I trade it with all the technical things I have to beware of. That means exact, only execute the trade when the setup is given, handling the stop as allowed, pulling the target and stop at the beginning where it have to be, measuring the risk reward, And I use for reference volume profile and calculating volume profile and calculating there my stop and my targets, and also the big picture preparation. And as a tool, instrument to work, or like my shoes to work in this environment of volume profile, I use auction theory as my shoes or as my car. My car is auction theory, where I'm moving in this environment of volume profile or big picture. So I measured all these points, and this is what I'm doing right now, making my journal. And this is what I'm doing during trading already, because then I'm very close to this information, and you know, the result is that I am now really aware, and I feel more relaxed during trading, because my feelings, my old behavioral patterns weaken and new behavioral patterns getting stronger. For example, finding more joy for the process, being focused and fresh during my trade execution phase, not having this pain anymore, have stopped fighting my brain during the trade. So this is everything step by step by step, weakening down and down, decreasing emotions. So this is the goal, because then you can finally start developing plays that make sense. And you also, when you measure the right thing, know in a lucrative trades, you have 10 out of 10 this week lucrative trades and still having a minus P&L, then you can be very lucky and proud on yourself. Then you know what? My emotions are under control already. I can take lucrative trade, I can stick to my trading, but at the end it's a minus trade. You know what? That's super perfect. That's the beginning now. Then you know your play is not good yet. And it's not so hard than working on your emotions. You can trust me, working on your play. Of course, it takes a month. But when you have already the understanding for the market and the market participants, know everything what you should know about volume profile, market profile, and auction theory, then you have the half of the way already made. And then you can work on your play. And then again, when you have worked on your play, you're maybe not feeling so comfortable at the beginning. That means the emotional at the beginning, when you have worked on the play, is not so good like you have achieved at the moment. That's okay. Then you weak maybe 1, 2, 3 days, and it's getting more and more and more back to the normal thing. And then you can see, wow, now keeping my mindset in control and my plays is getting better. You see automatic that your P&L getting better. You understand? And as you know that you at the beginning now having a lot of lousy trades, I will promise you, when you start measuring the right way, you will see you have a lot of lousy trades. And these lousy trades destroy maybe even your already good developed plays. And then that's the reason. Maybe your place is already very good, but you see, okay, my mindset is just not under control, that's okay. But now I will stop fighting my mind. I say, that's okay, that's acceptance for this situation. And then you see, okay, what will then be my goal? My goal is via finding the right mindset to get into this exercise and say, my goal is to erase my lousy trades. For example, when I started, my lousy trade rate was about 40%. That means it wasn't so bad. It means already 60% of my trades were lucrative trades, but the 40% of lousy trades made my lucrative trades get at my P&L to erase it, and at the end I was at zero. This was a long problem for me. I made at least made it to can swim with the market, don't lose money anymore. That means I earned 30, I earned 50, I earned 100, I lose 30, I lose 50, I lose 100. So at the end of the month I was around zero. I was able to hold on this streak for month and month and month. And I knew this is the first and important thing what you can achieve as a trader. And I was of course also proud. I knew now I can make 100 of trades over many months and didn't lose money overall. This I was proud of. I knew, of course, on the other side I still was underperforming, but I was very proud because I knew how fast you can lose your money, even in 1 or 2 days, your whole account. So if you start maybe with a 5,000 euros, you know that this is no problem. When I started with CFD 3 years ago, I know it was no problem to lose 1,000 on a day. You can even lose more. So I know this was a good step. But I knew also, when I have so much lousy trends, that at the end I will underperform. And now with this psychological work, which I'm not at the end, you will not at the end ever, but at least you will reach some spheres where you can say, now I'm feeling kind of confident. So for example, my lucrative trade rate, and I have to look now at my sheet, because I'm working now with the September sheet, and September there's only one day yet. So we have to look at the last sheet. Wait a second. Where's my rate? Where is my sheet first? There's the course, compass, mind matter. Here's August. Last number. So I said it was 60% lucrative and 40% lousy trades. And now working with this sheet now for 6 weeks, so this new very deep psychological insight journal, I'm down and having now 76% lucrative trades. That means only a 24% lousy trades. That means I'm already at 76% of my trades in this time, and this were 33 trades, and 76% of them were lucrative. That made, of course, at the end, this P&L rise and rise and rise. Of course, this have to happen. So that's just some insight how I measure, and doing this also, like I told you now, during the trading day. No reason not to do it when you're still having all this information where you can remember. Back to trading. You see then how weak market is then reaching this area from the open range. So that is what I meant. It wasn't very easy now when you were in this long trade here, starting seeing the responsive buying again with the pullback here. You see how disturbing and nerve-weaving this is to stay in this trade. Huh? You may start it here at 10 o'clock, and now we have 10:20 and still only made 2 ticks on the upside, no? Or 3. So it's very, very weak, and of course, because we are already here in the top area of the profile, because the morning range after the open was so tight, no? So I don't change after this 20 minutes of talking now. I wouldn't made any chances to my trading so far, because you see, nothing more to do. This was our favorite play. This was our hypo number 2 from the morning. They reaching target 1 and target 2 area, and that's it. And that's totally okay. I mean, I'm lucky. Bund normally gives me 1 out of the 3 hypos I make normally, and this is normally enough to earn money, enough for your goals. Later you start then working with more positions and working with a bigger amount of contracts, and this is then something you have to achieve later. But first you have to go with a 1 contract and learn it. And Bund, I would be quite happy. I didn't got filled, I told you, but if I got filled, I would be happy now. And as I am not having now opportunity, I'm not fighting anything. My brain, I'm totally at least 90% focused and calm, and I'm absolutely okay with this, as I didn't get filled. So this doesn't disturb me anymore like earlier in the past. So that's the way it is. I didn't get it, and at the end of a period, after some, let's call it some 4 weeks, I do measure then my lucrative plays and look, can I make some adjustments? Are they good? Can they be better? Have I have to make adjustments? Do I have to allow a more risk or less risk? Because, for example, when I'm measuring now, seeing that my short didn't get filled, and I see, for example, the last 4 weeks I made, let's say, 10 trades like this. But from these 10 trades, I only got 3 times filled, okay? And the other 7 times I didn't get filled. Overall, imagine this would have worked out because we stood with our play and with our technical entries and stop exits and stuff. And then I see, okay, I missed 7 trades that worked out. I only got in 3 times. So that means I have to make adjustments to my lucrative trades because my place is then not good enough. That's okay. So that means just my lucrative play, my lucrative trade is based on a play that's just not good enough. I have to be better. I have to be better, and now I can measure again. And you know what? You cannot do this when you don't know if this was even a lucrative or lousy trade. Because if you think, wow, I'm so proud, I made 5+ trades last week from 6 trades. But I tell you what, if from these 5 trades, 3 or 4 were lousy trades, you shouldn't be proud at all. And you know what? It was cheating on yourself later when you then measure and make adjustments on your plays. As you don't know that these were lousy trades, but you only made the distinction between winners and losers, you made then changes on the lousy trade based setup, and at the end you will not make any progress in your trading. You have to find out what is your lucrative and your lousy trades. That's just what I want to say. All right, let's make a break. All right, Bund is going back to balance. That means we see now already a normal shaped distribution. You see this here? We're filling out this lower volume nodes now here as price is trading within this area. So Bund gave us this move, this opportunity. Now trading back, we're staying at the moment below yesterday value low, but we're building at least some value within the overall value from yesterday. When I talk yesterday, I of course mean last trading day. This was Friday. So everything now back to balance, and that means normally overall phase number 1 and 2 and back to balance. The 3 phases I I expect for my trading in the morning session, this is very, very important, has already happened. That's it for me. I will not look now for any more trades in this market at this time for today morning session. It's important. We always talk in only, I'm trading this Bund only, the Bund only here for this 2 hours trading session. And when I see my play is happening outside from the open range, reversing, finding balance, phase 1, phase 2, phase 3 in the bigger picture, then that's it for me. Nothing more, because I know I have measured for months and months that this is my most profitable trading hours, looking for the initiative moves starting after the 9 o'clock a.m. Frankfurt cash open. All right. So, I decided to make some Q&A again today, question and answers, because Bart is always having very interesting questions. And so you can prepare yourself on a topic, okay? On a special topic, and the question was of Bart, if I do implement this following topic into my trading of Bund, if I get it right. He asked me he recommended me to read following article, and this article was about how Bund future reacts on changes of the interest rate. So in Germany, for example, if we see that the interest rate getting up by 100 basic points by 1%, how does it impact, of course, the Bund, as it is a instrument, a fixed income based on a 10-year German bond. This is in between, right around the 10% fictive bond. And of course, with this increasing, the price of the future will go down, and with a decrease, it will go up. So, and of course, you can calculate that. We did it at the exchange when I made my exam as a derivative trader. We of course had this completely theoretical stuff with the fixed income futures and how to calculate and how to calculate it based on the future price and what will be the price of the bond then, and duration and everything. So the question was, how do I implement and do I need this for trading the Bund? I think this was the question. And we will talk about this then, starting a question and answer. And if you want to, we can start earlier, before 11 o'clock, because for me Bund is over. I will not tell you to not trade, but for me it is over yet. That means I can stop my session, my live stream earlier, because it doesn't make sense for me anyway to talk something when there's nothing happen anymore, to talk about something. So we can talk about it. So if it's okay for you, just write a message here into the public chat if you're interested to talk about this calculation of Bund and impact of interest rate changes, and how it has then also impact on your trading. If you're interested, just write me a short message here in the public chat, say, okay, interesting, then we will close the session and go to the question and answering. If nobody's interested so far to quit the session so earlier, that's okay for me too. Then we will stop just at 9 o'clock, at 11 o'clock, and then we turn to the question and answers. Bart is interested, of course, yes. Appreciate it. Yeah, that was your question now. And all right. Just write a message into public chat. All right, again, if somebody's interested, write a message into the public chat of our Discord room, and we will discuss a little bit bond market of today, and you can also ask me some questions. And main topic will be the impact of changes of interest rate on your trading and how to implement it and how to handle it. Just write a message. I see 6 people still watching my stream here, live stream. And just write into the public chat if you're interested as well on some question and answers. Then we can stop the session already now, and if not, then I will stop at 11 o'clock. Okay, congratulations if you stayed in the trade. This long trade here, when I told you that I'm not trading it because target area already here at the 96. And you see now that we're reaching this area, open range high, went up to the 98 level, and the edge here starting at the 96 to 98 is about to be reached now. And so I would take my profit here. This would be the trade that made sense. Seeing here, we taken out the sell control level here. We're pulling back. One could have entered here and reaching now at this moment the target. So you see 1, 2, okay, one did not get into it here maybe, but here 1, 2, 3, 4 to 5 ticks you made now. And that's it. And remember, this everything here is the area where some failed breakout can happen. That means if you're want to trade the long, what I would not recommend, as long as we don't see strong volume taken out the high and weak pullback. If this is not happening, everything else would be just a failed breakout. And then even a decision make to get into a short if you see failed breakout or responsive selling with double rejection. This would even give you the chance to get into a short here, because remember, we enter here again the area of today's volume edge. We will take a look to the left, to the pre-market, and as I told you here, the volume edge, the next at the overnight low, the level 02 and 04. This is the volume edge from the pre-market, where it comes down from the overnight market. So that means there's still some resistance area, and that means this is the volume edge where you would look here. If we get above, we're looking for a long. I will have a look onto my hypo number 3 today, and it was I wrote down if increasing buy volume into the higher pre-market volume edge, and this was at 8 o'clock 22. 179.04. So sorry, that means no long before we're not hitting the level 179.04 and taking it out with high volume and weak pullback. The rest here in this area is just a area of where we're looking here for a range short. That would mean the cash open area here. We are right now at this volume edge. That means you're looking now for responsive selling. If you see responsive sellers, only then you can go for a range short with target number 1, 91, and target number 2, about 89. This is very, very tight, as it is just the way it is today. And the next target would be then the areas of the lower volume edge, the other side of the value around the 80. And on the other side, long, I would only go for the long if you see that the range short maybe fails and then going into a increasing volume with weak pullback, or you see that they even don't trade the range short and going straight up to the upside with the increasing buy volume. As long as this is not happening, you don't do anything. Right now we do see responsive selling, not only one but twice. That means this here is the area now to get into a short. So if you enter now the short, it would be totally okay. This would be a good play, but you have to know target 1 would be already at the 91 level, and target 2 would be around this volume edge here, 89. Because you see this, today's distribution is now very bimodal. That means we see it as 2 distribution. That means target 1 would be the POC, and the other side, the 80% rule, if we get to the POC, see the other side is very, very close already, 1 or 2 ticks below the POC. So only see this distribution and then see this. So that's very important. So right now you see you're in the trade, you have impulse phase number 1 started. We have not hit the target yet, but you can already pull your stop closer, because we see this is now impulse phase 1. Boom, here after the selling started, where you entered at the 96 level, you see boom, impulse phase 1 starting. They didn't make the target yet. That means anyway you see impulse phase 1. That means your stop is now closer from -4, from 2 ticks above, 299. All right? Means you now at the moment getting either stop out with -3 or you're waiting that impulse phase 2 is coming. If as impulse phase 2 is coming, only then you can avoid getting stopped out with -3, but not before. Before you just leave your stop at this level, and if you see impulse phase 2 is coming, then you have the chance to pull your stop. So this is at least what I would do, to the entry level. If not, then that's the way it is. Then you got stopped out. But you need to let the trade, the space for unfolding. As long as we don't see impulse phase 2, I would not make changes to my stop. Then, when we see impulse phase 2 and failing, why do we do this? Because we want to see a second attempt of people taking risk in the books. That means now it is obvious that we need to see lower prices, and then it's okay technically to pull the stop to the entry level, because then we can react either by getting out manually. If you don't want to pull your stop, you can leave it always here, and then you can react manually, because you see then, boom, big buying rejection, boom, to the upside, and you know, okay, click, I get out, and then you maybe get out with 0 or -1. But if you not see this, right now, we don't do anything. We want to give it a chance to see at least impulse phase number 2 starting here in the delta, boom, getting lower, and see also price moving, taking out the low here. Then you can pull your stop closer. Right now we are in this range short trade. This is our target number 1 here. what you see is that there is liquidity provided. There's now nothing to do, please, for your trade at the moment, okay? Don't get me wrong. I just want to tell you what is happening in the order book. You see here, liquidity is provided. Yeah, some thick volume, 500 contracts are provided here in the offer. That means the people that buy into it, seen for the moment now it is a real. 28 was bought, only 7, only 3. You see, some guys do buy into the offer here at 97. But you see the liquidity is real. And you see that they absorb the market buying here. Now they buy into the high, and you see they can take out the liquidity. That means some guy got into that 437 contracts. You now should be stopped out, because this is where your stop should be now, at the 99 level. See this here? At 99. You should have been stopped out now. Because they took out this liquidity. They took it real. You see this high bump of volume taking place. And absolutely right. This would be a lucrative trade. This is a lucrative trade if you just stayed with your stop rule. Everything is totally okay, and this was okay. Nobody could foresee this, that this can happen. That doesn't matter. Sometimes you get paid, sometimes you're not. But most of the time, you take this as a taken out of the trade, because this is a strong sign that they want to test now the upside. So that means let them test the upside. Let them test this level where I said of interest, the 04 level or the 03, 04. And then there's the second chance. You either go for looking responsive selling again, to go here for a range short again, because it's still everything okay here from the pre-market higher volume edge and the overnight low. Or you're going with the long, and the long would mean that you want to see the same behavior like here, but at the top. That means we want to see they take out the high, the overnight high 03 or 04 level, boom, selling weak, then back, a weak pullback, and then you can go with the weak pullback, looking where to spot in the volume profile, where's the volume edge, where's the low volume node, and go then in for a long trade. You know that they want to re-enter then this lower volume node from the last trading day, and we may see then the target areas here, 09 to 012 area. That would be totally okay. But as long as this is not happening, this is just another chance here then to go look for a responsive selling, to go for another short chance. But you're not standing in the way of them as this is looking right now. That means you're not sitting here. I would not sit here in a short anymore from the 96 to get minus 3, 4, 5, 6, 7 ticks against me. This wouldn't be smart. All right? Doesn't matter what's happening. This is not the trade we want to see anymore, because people invested here to get into a bullish situation. Boom, taken out. People got stopped out. That means this is now a bullish control level. Why is the green color so weak? Let's make it 70%. Now you can see better. So this is now our bullish control level here. And let's see if they stay in control. And I just want to show you with this is not smart to stay in a short trade so far when you see that there's a new level is created. On the other side, if you're still looking for the short and want to enter now when the structure breaks, I have marked here. So you see here the 94 area, 95 area where we are right now. If this breaks with strong selling volume, this would also technically would be totally okay to enter for the big picture short, but in the small picture, for one lot, this wouldn't be smart because the target would already then here again, 91. You see this? 90, 91. So 1, 2, 3. This would only 3 tick chance here if you enter then fast at this level when they break the structure. So this would be not very good risk reward. Just want to tell you how to think and calculate to see what is happening. This was just a lucrative trade that didn't work out so far, as bull showed their interest, taken out the high with a strong buying volume. It was also not the moment to switch into the long because we are still in no man's land, because see my big picture duration, I want to see this behavior, not here, but here to get then into the long. Do you understand? This is how auction theory is working. Don't get caught in your emotions when you watch. Okay, now short didn't work. Okay, I have to switch to the long. Oh, one moment, this was no long level. Okay, then I have to switch to the short. Oh shit, short target is so close. You know what I mean? You have to make this calculation work before you get emotional, and you will get some kind of emotion always when you're switching them and click, even especially when you're live trading in your live account. If you're not trained to do so, this is even more complicated. So you see, short would be stupid here at this moment because you see already some people buying again. That doesn't mean that this signs here lead to a trade up to the 02, 04 area, but at least there is no trigger where you can say trigger based is my trading. When I have the trigger based on the big picture, then I trade. And if I don't get this trigger, then I don't trade. Why? Because I have measured, then I have a higher advantage that a trade will succeed in some direction than working, of course, without a trigger. you can see here that the bull's trying to stay in control. This is important. You see this here in the footprint. Here is the order book, and you see when people sell, boom, they try to protect this because this is now was an area where you saw that the first trade of the range short failed and people got into some longs and they protected this area. This is the 95 area around. So of course it took some time and they still cannot find more buyers. So that means it maybe was fishing for liquidity just. And we couldn't do anything. So this means that there is no more profit can be taken and they then get out of the position. And this was just a failed attempt maybe to get some liquidity. And now they will get to the downside, to the lower side. And here, of course, you know that the target area is already reached at the 91 level. This is why I told you I would not go here for the short, because the area where the target is, number one, is already at the 91. So here anymore, no reason for me to get short now. This is then just a failed breakout, a fail trying to fish liquidity. But overall, this is just a weak market time. This is why I didn't trade the situation. And you never know. But anyway, if you made the decision, this is a good market time, all right? Here, at this moment where I told you I would now look here at 96 for the trade because we see the responsive selling and you got stopped out and now having this trade with -3 ticks, everything okay. You can make money with this strategy because responsive selling at a certain area where we have provided here, prepared here, is a very good edge. Gives you a minimum of advantage you need for a trade then. So, absolutely okay. So for the trading day, for the morning session, that's it, 11 o'clock. And we will go now to our Discord room. We meet here in our public voice chat and I will answer some questions. We will start with question number 1 from Bart. Immediately with the interest rates and impact on your trading and overall impacts on the future. And then we have also think some other questions, and I will just end the session now. Thank you, and in a few minutes, in a minute or what, I'm at the Discord public chat. Thanks for watching. Anton Hopfel for Manapa.